Good evening. It's nice to see all of you here tonight. Being here actually holds some special significance for me tonight. I was one of the people that raised their hands and said that I'd been at Workbench before. It was actually on one of those couches over there that I sat with the founder of Workbench, Jonathan Lair, and told him that after spending almost 20 years building companies in SaaS, I was done with SaaS. I caught the virus of blockchain. I was obsessed with blockchain. I was reading about it 24/7. And I was going to leave the company that I was at that was doing really well, customer based here in New York, to go into blockchain. But I didn't know what I was going to do or how I was going to do it, but I knew I wanted to do blockchain. And Jonathan Lair was very supportive, as he's been for lots of founders. So I definitely want to do another shout out for Workbench. It's a great place to work. I actually worked from here part-time the first few months I was getting M-State up and running. It's a great place to work and a great cohort of companies. So thank you, Workbench. Anyway, so a quick word or two about, or a few about M-State. How many people here have heard about M-State before? Okay, good. So that was more than the last time I asked that question at another event, so that's good. That means we're doing a good job. So M-State is a early stage accelerator slash fund for enterprise blockchain. We're backed by Comcast Ventures and IBM. We launched officially in January of this year. We've made 3 investments, have another 2 left to go in our first cohort, and are already working on our next fund. We typically invest, there's 3 layers to the blockchain ecosystem in our minds: the protocol layer, the infrastructure layer, and the dApp layer. We most commonly invest in the infrastructure layer, highly technical companies that are focusing on solving technical problems around blockchain technology, whether it's closed or public networks. We're protocol agnostic, and the companies we've invested in so far include Blockdaemon, which is node deployment as a service, kind of like Heroku; Amber Data, which is node monitoring as a service, a little bit like New Relic or Splunk. And then we have a top secret 3rd investment up in the application layer. So we're still looking for companies. So if you know any awesome enterprise blockchain companies, we would love to meet them. I'm R at M-State. I'm also at RMB on Twitter. We've probably looked at over 600 companies just in the last 3 months. So the sector is booming. One area that we particularly like is obviously supply chain, which we think is perfectly suited for blockchain technology because of its multi-party nature and the massive opportunities to run things better. So it's definitely very exciting for me to be a part of these meetups. And we have just an incredible roster of people. I've been working with the organizers for the last few months on who is going to be speaking tonight. And every time I got an email from them, we had more awesome speakers. So having now been a part of, I don't know, probably 15 or 20 events in the last few months focused on blockchain, I can safely tell you that this is one of the best groups of panelists and keynote speakers that I've seen. And it's free, which is pretty awesome. So you guys are all very lucky. I think we're in for a great evening. We have, as you probably heard, 2 panels with Silvio in the middle. I asked the organizers who's on the first versus second panel, or what are the topics. It's pretty much going to be the same. I'm going to make the discussion highly interactive. And we're going to ask a lot of specific questions and focus very much on use cases. I do want it to be interactive. So unlike some of those boring panels where you just kind of sit there and check your phone for 40 minutes, if you have a question, raise your hand, and there's a good chance I'm going to call on you, especially if your question's good. In between the 2 panels, we're very lucky to have Silvio, who's a professor at MIT and the founder of Algorand. And I've been told that one of the main themes he will be talking about in his keynote is how what everybody else is saying is wrong. So we'll see about that. So anyway, we're very honored to have you here tonight, Silvio. So anyway, we're going to now, it looks like you are either going to be a panelist or doing a music concert. I'm not really sure which. You guys ready to go? That's like a pretty elaborate mic scheme going on there. So it's going to be combination blockchain and dance number.
So I don't know if am I?
Yeah, exactly. I think a Britney Spears number, one of my favorites.
Oh.
I'll stall here, but actually also ask some good questions. I actually do this now when I host panels because it's a great way to kind of level set on the audience. So I'm going to ask a few just very basic, simple questions about blockchain. Raise your hand. Don't be afraid. Don't be shy. How many of you here hold crypto? Awesome. I actually spoke on a panel earlier this week as a financial services conference for fund managers. Only 2 people out of like 60 raised their hands, and it was like a little painful. So I'm glad to see that we have what I think is probably a much higher level of blockchain and crypto literacy. How many people here work in blockchain? Wow. Awesome. Very cool. And how many people have worked in blockchain for more than a year? Awesome. More than 2 years. Wow, you're cheating. Awesome. So we definitely have some very experienced folks. I think if you've been in this space longer than 2 years, there's the idea of dog years and internet years. There's also blockchain time. And so I think if you've been in blockchain and crypto for longer than 2 or 3 years, you're like an OG, old school person. So it's great to have some of you in the audience. And I'm going to count on you specifically to ask some of the tougher questions of our panelists today. So panelists, are you now ready, or are we still getting wired up? I think at this point you should just come up.
Yes.
Yeah.
We'll just come up. I get to go all the way down to the end here. All right. You gonna stand?
Yeah, I'm gonna stand.
Okay. Cool.
Okay, are we good? Test, test, test. Does it work?
Yeah.
Work enough? Okay. I have much less hair than she does.
Mine as well. All right. So as is typical with panels, we are going to start with introductions. We don't want the whole panel session to be introductions, so we're going to ask the panelists to try and keep it under, say, 60 seconds. Who you are, what you do, and then I think to liven it up a little bit more, why you first got into blockchain.
My name is Todd Scott. I'm a vice president within our blockchain organization responsible for global trade. And I got into blockchain, I was asked to do it. No. In all seriousness, I kind of was asked to do it because we're doing something that's pretty interesting for IBM, certainly. And I'll get more into that a little bit later. But my background within IBM with helping to conquer challenges that are new within IBM is why I was selected to do it. And I have been in this role for about, 90 days? And it's been remarkable. It's been exciting. I've learned a ton. I've been around the world a couple times already, and I can't wait to share some of those ideas and thoughts with you.
Great. Hi, I'm Tanjila Islam. I'm the CEO and founder of TigerTrade. We are a global B2B marketplace for buying and selling excess inventory worldwide. And the reason that we got into blockchain is because we do these end-to-end international trade transactions that start with vendor verification of companies around the world, authenticating merchandise, large international payments, as well as the shipment and fulfillment process. So as you guys can imagine, it's quite complicated, a lot of different steps. And with the emergence of blockchain, this has a lot of applications for our business to help make the entire transaction process more efficient, transparent, secure, as well as repeatable. So, we've been very excited about all of the developments in the industry and looking forward to hearing everyone's thoughts.
Nolan Bowerly, I'm the director of research at CoinDesk. I got involved in cryptocurrencies in 2012, learning how to launder money, and saw the added benefit that you could buy drugs. And I said, if it's good for drugs and good to launder money, it's going to be good for a ton of things. So from there, got into crypto.
Quick note, if the panelists talk about anything that is illegal, please don't tweet about it.
Hopefully mine works. My name is Scott Carlson. I'm the Chief Information Security Officer at a company called Sweetbridge. By history, I worked at Cargill, Charles Schwab, and PayPal, where I was the security architect for those companies. So I come from, building data centers and steel mills, and I bring security into Sweetbridge. Sweetbridge is trying to build, I guess we call it the economy of possible. When you think about supply chain, throughout history there has been a chunk of people that do finance, a chunk of people you have to ask for trust, a bunch of inventory, and a bunch of other stuff that the real world sort of figures out as they go. And for the first time ever, we have a technology that can help solve a trust problem, help solve a money problem, help solve an inventory problem, and make it go really quick. And so what I'm doing at a blockchain company is, when I looked at the ecosystem and you Google things like blockchain security, like the only thing that comes up is blockchainsecurity.com. There's no good white papers on how to secure it, and I don't mean the blockchain itself, I mean all the stuff that everybody's building, right? We are building a bunch of applications that have real money in that people are losing, real processes that nobody wants their stuff stolen. So not only do we have to layer real security on this, but we have to do it in a way that's legal and follows everything that everybody wants to do globally. So it'll be quite a fun thing.
Awesome. Well, I think we'll get right into it. I think the central theme of the night is obviously taking blockchain from the lab into the real world. So let's get right into it. When I'm at cocktail parties, I get two really annoying questions. Question one, once they find out that I'm in blockchain and crypto, is what crypto should I buy? You guys been asked that? It's really annoying. And then question two, which is just as annoying, is, blockchain sounds cool, but is it really ready for prime time? So let's get right into it, since it is the theme of the night. I'd love to hear about specific stories, and I think the audience would as well. Let's hear some stories about either blockchain technology that has really gone into production or that will go into production soon. And again, I'm going to remind the audience, please don't tweet about any of this, because the less you're tweeting about it, the more honest and open our panelists will be. So blockchain, is it ready for prime time in supply chain, and what are the use cases?
I'll be happy to go first. I think it is. So what we are really, IBM has a whole blockchain division. We've got a couple of different areas we're focused on. I happen to be responsible for global trade. And global trade, the number one application that we have, or solution that we've built, centers around how do we gain efficiencies with shipping cargo over the waterways. 80% of the consumer goods go over the waterways that we all consume, okay? Incredibly inefficient. It's inefficient because there's lack of visibility into the supply chain, but also the amount of documents. Every country in the world has certain documentation that you have to have in order to be able to ship from Japan to the United States, from the United States to Peru. Incredibly inefficient. So what we've done is we've developed an application, or a platform, I should say, and that keyword being platform, that's blockchain-based, that allows you to track events. Every player in the ecosystem can track where cargo is at any given time. Think of it as an event management tool. Now, here's the deal. Today, that data exists, except it exists in pockets, or when it doesn't get to the right person in a timely manner. A single platform will allow everyone to see all these updated events in near real time. Okay? And then, of course, the more heavy-duty aspect of blockchain are the documents. These documents will be secure within, as you know, IBM uses Hyperledger. So we'll be able to have anybody who's a player in that particular blockchain have the documents, validate the documents, and be able to close transactions in a much more efficient and effective manner. Very real. We are looking to go live with this with some customers in the third quarter, and will be generally available with clients in the fourth quarter.
Congratulations. I have to ask, since you're from IBM, I noticed you guys had a big announcement this week in jewelry, I think TruePoint or something like that. Can you tell us, what can you tell us about that?
Sure, same concept. So one of the big things, and by the way, you could do this with almost any industry. We're doing it in mining, but essentially what we announced today is a consortium of jeweler manufacturers. They're taking certain products that they have and being able to trace it back to its origin. So let's take diamonds. One of the things that people want to declare is that they don't want to get blood diamonds. So they'd be able to trace this and track it all the way through the ecosystem until it gets on your bride's or your girlfriend's or fiance onto her hand. So very exciting announcement. And you probably heard the same thing about food trust, right? Where we've got another real application that, of course, we could have used it in full blown this past week when we heard about the lettuce and the E. coli. But instead of it requiring months and months in order to trace food back to its origin or where it's been, we've created a solution, and it's been tested. It just hasn't been fully utilized yet, down to minutes.
Awesome. Now, I think previously an IBM exec at another event that I hosted said that of the hundreds of pilots you guys had, you already had something like 50 that had gone into production. So that's a pretty awesome number. But we have 3 other panelists, including 2 that seem really enthusiastic to also answer this question. So I'm going to leave it up to you guys to figure it out.
Can I go first?
Sure.
So I'll agree with a yes, but only for intra-company use cases. The internet's a distributed thing. The world is a distributed thing. Blockchain and crypto is a distributed chain of trust, right? There is no common set of protocols today. There is no common set of APIs where people can just use a solution globally. So it's really not ready for small companies to say, hey, I want to take and sell my goods. Is everybody available? No disrespect to IBM, they've centralized a lot of the things inside of IBM to lead this cause. It's not an open, I mean, Hyperledger's open, but it's not like a distributed set of APIs yet. And so maybe it's not ready because it's not internet scale. It's totally ready because the math is good and the technology works. So small projects, great. Big projects, we need help.
So are you saying was your issue really about it being a Hyperledger being closed or a permission-based system?
No, it's not that. There's no,
So if the APIs
how do I
were
say it?
open,
Like DNS, right? DNS is just all over the place.
Right.
There's no Hyperledger all over the place yet that you can just plug in.
Right.
You still have to build it and use it yourself. That's what I mean.
So what I took from what I thought you said is if the APIs aren't available, it's essentially closed. So if the APIs are available and different solutions can either hook into it, or you've got a permission environment so that if the 3 of us wanted to do business together, we could, as long as we all agree that, hey, these are the 10 documents that are going. Now you've got a very secure,
Absolutely.
very functional environment.
But we need a common global set of protocols to help everything else.
So I'm actually hearing 2 really interesting themes here, which is the difference between closed systems and open public chains, and then a need for possibly some interoperability between the 2 of them, right? Mm-hmm. Definitely your turn.
Thanks. So interesting point you're bringing up there. Oh, I agree that blockchain's definitely ready for prime time. Like I mentioned earlier, in our business of global trade, there's a lot of use cases, starting with KYC, know your customer, being able to authenticate who these vendors are worldwide, and be able to continue building on that authentication through the transaction history that we collect as we do these transactions, and then bringing more companies and markets into the global economy by being able to do so. So merchandise authentication as well. Payments is a big issue, and we were actually talking about that with IBM today, with international wire transfers being the main mode of payment currently utilized for international trade. They're very insecure, they take a long time, and there's a lot of money lost in terms of money movement, as well as the exchange risk and the currency risks.
Could you go a little deeper? Because you've built an incredible company, and you have firsthand experience in how horrible cross-border payments are.
Yes.
So, give us a real example of how horrible it is.
Okay, great.
You mean very secure or very insecure?
Insecure, yeah. So great, I'm happy to have many examples, but I'll give one example of a transaction that we did with an Italian brand moving 1 million units of their excess inventory last year from Italy to Panama and Mexico. So this was a 3.3 million euro transaction that we were doing, and it was a 40 container shipment, which is a significant amount of containers, and as a result, it took 3 months to actually complete the entire transaction. As you can imagine, the buyers in Panama and Mexico wanted to be protected, so they have to put a 30% deposit down, but at the same time, they were paying for each container as it was shipping. Over this 3-month period, the euro actually jumped by 15%. So you can imagine on this 3.3 million euro transaction, the amount of money our buyers lost just from the exchange risk alone, let alone the insecurity that, of sending these payments even before the shipments were delivered or arrived to their warehouses in Mexico and Panama. So this is an example of a typical transaction that's this is a large one, but it's a transaction taking place with our buyers and sellers worldwide that are very large retailers, brands, and manufacturers. And they are still having to utilize these archaic systems. And because a lot of our customers are in emerging markets, they're not able to access any type of trade financing, payment terms, and have to rely on these archaic banking systems. So companies like IBM are coming up with blockchain solutions that we can then work with our customers worldwide to utilize to make these transactions instantaneous, secure, and connected to smart contracts. So they can have the money in place securely, but then the money is only paid out to the seller once merchandise is arriving and verified. So that's an example.
That's a great example. Thank you.
Is that an example, a real world use case example that you just gave us, or is that one that can you tell us an exact real world example, just like you said, saving your customers money? How did you all use IBM, make your homegrown blockchain? What steps, at a very high level, quick answer, what steps, are you using IBM, or are you using some other platform?
That's a great question. So just to clarify, and if you didn't hear the question, she was asking, was that a real use case, and were we working with IBM for that? So that was a real use case in our business, but it was pre-blockchain, so we were not working with IBM or any blockchain solution. But as you guys can see, regarding the complexity, the myriad of partners involved, the scale of the shipments and the payments, a blockchain would be an excellent solution. And so what we are doing now is working with potential partners like IBM to see, okay, what kind of payment solution can we build out for our customers worldwide so that the international transfers are secure, instantaneous, and can be protected and linked to smart contracts that the payments are then triggered with specific deliveries or authenticate, checking the merchandise and other things like that.
Is your solution? I think one of the problems is this one is that including IBM solution. When you do this transfer, you're doing on-chain settlement. So what you do is blockchain use blockchain to keep record, and then all the shipment logic document. That's one thing, right? You can use regular data to do that. One of the important aspects is when you have a smart country, you will do instantaneous settlement, on-chain settlement, which uses cryptocurrency. But in the current solution, I believe you still rely on off-chain financial institution to process the payment. Even though you have a smart contract, you still need to have checking whether you receive the payment or not from the financial institution before you actually do the exchange and then exchange the record on the blockchain.
That's fair.
In this case, you're not solving much of a problem.
We are solving problems just in terms of the security of the payments, because wire transfers are insecure in terms of they can be, once they're sent, they're not able to be.
Hey, don't interrupt the panelist.
They're able to be.
Hey, don't interrupt the panelist.
They're able to be recalled.
Go ahead.
And thank you. And they're able to be, wires, are difficult to recall. So there is a security in the payment. There's a linking. There's instantaneous payment because international wires on average take 3 days. Sometimes they take up to a week, which we experience on a daily basis. And then also triggering the payments with smart contracts. If you're familiar with letters of credit, which is a typical form of payment that's utilized in international trade, but it's very archaic because it's based on a number of different documents that have to be exact in order to trigger a payment. To be able to do that, through the blockchain will make that payment far less costly, far more quick, and much more easy to verify the documentation to be able to do that.
That's actually the problem is that, when you do a blockchain, are you saying that it's an exchange of the message or exchange of the token or value itself? Because when you're saying that, let's say if I pay you, how do you do the payment on your current blockchain solution? Are you using a cryptocurrency payment?
Well, we would not, I mean, for our customers, we would be open to cryptocurrency, but honestly, our customers are large wholesalers and retailers worldwide. So blockchain does not necessarily mean that companies have to utilize cryptocurrency.
Hey, guys, let's give some other people a chance. Also, let's keep in mind here, she's just starting to look at blockchain and crypto in trade finance. She's just getting started, so I think let's be a little fair and not drill her with all your questions. We've got a bunch of other questions here.
Yeah.
It feels like the key problem in terms of getting these folks to work together is actually not a technology problem. It's a coordination problem. Getting everybody to agree on a common approach. It feels like the IBM Maersk names help drive adoption of a common approach. But how do you think about solving that problem as distinct from the technical?
I think that's a great, if you didn't hear the question, what he was suggesting is that, hey, listen, this is not about necessarily technology, but how are you going to get everyone to settle on this platform to actually use it? That fair way of saying it? And I think that is the number one thing that we all need to be thinking about when we think about blockchain. It's easy for me, having played many, many moons ago, I've always relied on my teammates, right? High school, college level, always relying on teammates. That's kind of the way blockchain works. You cannot be successful with blockchain by yourself. The ecosystem must be engaged. So, in the example of ocean moving cargo, you've got to have the beneficial cargo owner. You've got to have logistics companies. You've got to have ocean carriers, right? You've got to have ports, terminals. You've got to have customs. If everyone's not engaging, the solution or the value of that blockchain begins to be minimized. The other component of this is that while, yes, we are engaged with our great partner, Maersk, they're not the only ocean carrier in the world. So we have to work through the political aspects of engaging other ocean carriers around the world to, again, make this really beneficial. It doesn't work if you've only gotten certain trade lanes. Because if I'm a big company, if I'm Sony, if I'm Panasonic, if I'm Walmart, I'm shipping stuff all over the world. If you can only help me going from Yokohama to the port of LA or back, value is not quite as much.
Can I add something to this real quick?
Yeah, of course.
There are a lot of companies that we've met with and talked to that won't fund a blockchain project until they see a legitimate ROI from somebody that matters, like IBM. Real white paper comes out with real, hey, we saved 30% and we invested this. All of a sudden, CEOs say, hey, R&D people, go look at this, right? That kickstart the second round of investment. Right, today a bunch of people have a bunch of crypto money, they're throwing it at, IBM bet the future on some of this, early adopters, alpha, now we're going into second round of investment, more use cases, and then maybe a third, where we have things that we can plug together. So this first thing will...
And to just give a bit of a historic sense of what's going on, CoinDesk sort of has a really great line of sight and vantage point to this entire industry. We were there when it was just cypherpunks and libertarians. We saw the capital markets guys enter, right? And this year, finally, we saw this sort of psychological migration that had to happen to Wall Street, where they saw these digital tokens as actual property. And that was really our conclusion for 2017, is that Wall Street, investors, all kinds of people around the world saw these ephemeral cryptographic keys that move data on a distributed ledger as actual property. So that psychological divide was overcome, we think, and that's where we saw this huge year. Well, enterprise was really about a year after these capital markets people. The capital markets people started having a vision of what Bitcoin could mean in 2013. Enterprise moved heavily into blockchain study, research in 2014. And they admitted at the time that this was going to be something that would be a challenge because they would have to change business process. People would be cut out. But if you see a blockchain as a place to form and secure digital relationships of all kinds, what we're saying is that everything in separate divisions in a company itself, in a supply chain management division with its own people who manage it, its own budget, its own managers, everybody, and a trade finance division in the same company, they don't even talk. These are not people that work together. So the conclusions already in 2014 were not only would supply chain managers and trade financiers come and have a place to meet and secure all their digital relationships in one place, that information and goods and value would be flowing on the same lines. There's even other partners. So I've got Todd coming to an event that we're doing in a few weeks, and it will be Todd from IBM. It'll be someone who's running a series of ports from China all the way to London, as well as the Department of Homeland Security here in New York City, because that's where they're at. The problem right now is not how to secure these channels. It's how to coordinate everyone to be literate in this place being the place where we actually form the contract. Just like in capital markets, they had to have that divide to say, this cryptographic key is worth $20,000. Had I even said it a year ago, people would have said, get the hell out of here. But now they do it. They'll pay you $20,000 for a cryptographic key in someone's digital wallet. So once there's those consequences of it meaning something for real, you'll have the coordination that's required, and we see it now.
Have you seen, as looking at the entire market, is there a particular use case that you've seen that you thought was particularly awesome?
Well, I would say there's a collection. The provenance one is fantastic. We're seeing that mimicked sort of throughout industries. Food, luxury items were first. But really, that same quality is being extended with the CryptoKitties thing into almost a totally different use of one unique items. So this whole collectibles part is big. It's a big deal. So it's not exactly trade finance and supply chains, but it's an extension of those same use cases in an unintended way that we didn't picture happening. And we'll see how that develops.
I've heard that the makers of CryptoKitties have been flooded with Fortune 500s wanting to work with them. I had prepared a whole bunch of questions, which clearly I did not need to do. So we're going to go right over there to the corner if you want to stand up. And actually, I think it would be helpful if you also, when you're asking a question, stand up, give your name and where you work.
My name is Josh Shapiro. I'm the Chief Operating Officer of the Liberty Group, and we run two different companies, but we represent an ocean carrier and a multimodal logistics company, point-to-point around the world. So I'm going to give you a little bit of a different perspective of this, and I'll make a comment about IBM and Maersk, which is innovative in shipping. But my question is going to be about application of blockchain in the ocean world to the multimodal logistics supply chain. So it's great to talk about platforms and ecostructures, and I want blockchain. Liberty is one of probably the most cutting-edge tech adopters in the shipping business. The problem that we have with blockchain that we try and educate people from the ocean carrier multimodal perspective is we cannot go on one ecosystem. That is not going to happen. And there's a very specific reason. We have to connect to U.S. Customs and Border Import Systems. We need to connect to customers in Abu Dhabi. We need to connect to customers and regulatory agencies everywhere. But we all have our own required systems. So I'm communicating with Maersk right now. I have cargo on 4 Maersk ships. We're not as big as Maersk, the biggest shipping company in the world. I have no way to communicate through your blockchain system. So I would agree with this gentleman. Blockchain is not exactly ready for the general ocean carrier multimodal logistics network, but we want it. The challenge or the success company is going to be the one that can integrate us, where I at Liberty can use my system, and we are one of the exclusive logistics arms of Chrysler Fiat Group off the U.S. East Coast to the Middle East. I handle all their cargo. I have to comply with their systems, their requirements. We connect today through EDI. So what we need to do is figure out a solution, and I would ask this to the panel, where does it go from here? How do we get there? Where I can communicate with Maersk, with my cargo on a Maersk ship, where I can communicate with Fiat Chrysler, Mercedes, Hyundai, Kia, and all these major manufacturers worldwide. And we have to be able to connect through some ecosystem, but be using our own systems to communicate that we are today. So how do we get there?
Well, so if you think about, you just said EDI, so if you think about the world, so there's OFX and TIBCO and SWIFT and EDI, and they're all kind of standard structures, and you put information in a different little place. Like, I actually think the winner won't be a company that builds something for you to integrate with. I think it will be all of us working together to build blockchain EDI. I don't know. That's a common set of protocols that have the same template of thing for appropriate to your industry. Maybe there's a template for shipping, and you plug it in, and then the accounting and the journaling just happens underneath, and you can read it commonly, because that's what those protocols do.
So if you could apply it to that, you could have the entire automotive business overnight.
So maybe the world looks like a whole bunch of gateways to begin with, and then as people agree that that becomes a thing, people flip on the blockchain protocol button, and now it can go somewhere else who's got the new version, right? That kind of thing.
That's a great point. I want to highlight or actually ask you another question. Just in the general scheme of things, I know you can't give confidential numbers, but give us a general order of magnitude of what kind of savings a company like yours would have. First of all, how big you guys are, and then what kind of savings you might have if we can get all these guys working together.
Sure. So we have two different companies. I'm going to focus on our logistics company. We currently permanently manage 4 vessels of 6,500 car equivalent unit capacity and charter about 100 a year. We are also one of the select companies that does business with the U.S. government and the Department of Defense specifically. And so in terms of savings, I would break it up into a couple categories. Smart contracts have a huge savings from human efficiency. There's challenges to smart contracts. I'm actually speaking about that in June if anyone's interested.
Where?
Because they're internationally regulated.
Where?
At the Jardine Lloyd Thompson Insurance Forum on smart contracts.
That sounds really fancy.
So, savings-wise on smart contracts, tremendous, because humans get taken out of the equation, verification can happen, product integrity, and also one thing we need to bring up is sanctions. So I am, again, going to say just quickly on crypto, we want crypto. We have huge crypto problems in shipping that are yet to be dealt with. In terms of savings on cargo and commodity, my biggest focus at Liberty is automation. I want to make my staff's job easier. And so if cargo could talk, which I'm talking about non-passenger shipping, by communicating digitally to us, the savings are tremendous. I can't give you a dollar value off the top of my head, but think about it like this. On any given day, I have 100,000 pieces of moving cargo everywhere in the world. Most specifically, I could tell you today in Pakistan, I have over 15,000 pieces of moving cargo that are sensitive equipment. If I could communicate that with our customer, by not having to have on-ground reporting, in-transit visibility, or electronic pings, and connect that to blockchain or automation, I would have a whole different technology company within our shipping company.
So like tens of millions?
In what time frame?
5 years.
5 years, I would say you would be well over tens of millions.
Wow. I think there's going to be a lot of people that are going to want to talk to you after this.
My name is Ahmad. I run a technology boutique in Manhattan. I'm a programmer. I hire all programmers. We build financial systems for banks like Goldman Sachs, Morgan Stanley, Credit Suisse, Barclays, Citi. We do a lot of front office trading systems. We do work on blockchain. We implemented 2.1 based on provenance in the art world and in the pharmaceuticals. My main issue is with the statements that we've been hearing is there should be a distinction between blockchain and DLT, distributed ledger technologies. The only functional blockchains that we have right now are Bitcoin and Ethereum, which have a proof of work consensus, which means nodes authenticate everybody else. Distributed ledger like Hyperledger with Fabric, you can bring your own proof consensus algorithm, but a lot of it hasn't been established yet, or hasn't been tested by real-world users. So, can I? Yeah. So I'm not here to instigate anything, because I work in the industry. Yeah. But as we work and we actually build the systems, only Ethereum and Bitcoin actually work on proof of work consensus, which provides the immutability, the cryptographically sealed records, because multiple nodes are authenticating it. So if we're talking about a blockchain, that means it should be proof of work. If you talk about distributed ledger technology, that's a decentralized server, which exists already. Venmo gives you free transfer. Swift can do some interesting things. What the gentleman was talking about can be done with IoT. So sometimes when you think about integrated blockchain, which promises immutability, anonymity, trustless interaction, because you don't trust the central server, you think you don't trust anybody, you think if you're trustless, you might inherit, as we stand right now, I'm not talking about R&D that's happening in big corporations. I'm talking about industry standards, things that's happening right now. You inherit a lot of adjectives of the blockchain that maybe are too much to work with. For example, the ledger size. If you want to run a node, it's 180 gigabytes to run the Bitcoin ledger node right now. So imagine every shipping or every unit has to have that. So that might be too much. So I think my question is, or maybe my statement is, maybe you should distinguish between DLTs, distributed ledger technologies, like Ripple, which doesn't use its own currency to transfer money. It uses Swift. Ripple doesn't or Bitcoin and blockchain and Ethereum, where you have to pay money called gas in Ethereum to move, as opposed to Venmo, which does it free. So I'm just maybe engaging in the conversation, but not trying to.
Good statement.
Put it down
Is there a question? Because if not, I've got a question for you.
Does the panel use the word blockchain haphazardly or no?
That's sort of a leading question, dude.
So,
But I think the panel wants to answer it,
Yeah,
so I'm going to
so
give it to them. And
it's-
thank you very much for your question.
actually, I think that's a great, that last part in particular, because we were actually talking about this earlier. One of the fiducial responsibilities we have is to say, that's not blockchain. I get 5 calls a day where people are like, hey, I think I want to do this, I need to solve for this, and I'm listening, and I'm thinking, wow, we just have an ERP system that was just poorly put together, okay? And so we have a team of people who can help you with that. So that's point one. Point two, we try to not get into discussions of, Hyperledger versus Ethereum. There is a place for that. There's no question. Both of them have a value proposition. Depends on the business problem you're trying to solve for. Is it more, you need heavy transactions, multiple transactions, security? I mean, there's a lot of different components. So I'm not here to hate on Ethereum because we've made a decision on Hyperledger. I will tell you this. I haven't had one discussion yet, and I have a colleague who's been in this a little bit longer than I have, and he can challenge me on this. That's not the discussion that we have with clients. We don't have technology discussions. We have, what's the business problem you're trying to solve? And when we go down that path, then all of a sudden, as part of our solution that I talked about, there's part of it that is firmly based in blockchain, and there's another part of it that's not firmly based in blockchain. Why? Because we don't need it. The event management component I talked about is not per se in the blockchain. It's credentialed, but it's not permissioned. And I think that's the approach that we try to take within IBM, is to use the right technologies at the right time, but really focus on solving business problems.
That's a great answer. I've probably talked to 20 or 30 Fortune 500s in the last few months. None of them ask that question. They ask questions, what they talk about are things like, I've got this business problem, how can you solve it? If you solve it, how much money will I save? And how do I know that the technology that you're offering me is the right technology? So they don't ask so much about what's really DLT versus blockchain. They ask more, who else has used this already? And so that's actually, I found a really big challenge is no one wants to be first, but everybody wants to follow whoever's first. But I think you had wanted to add.
So, the brilliance of either DLT or blockchain technology is really a question of how these technologies were orchestrated in the first place. It's not the individual components that are new, it's the way they were arranged that was new. And when we and the way that they were arranged is with this cryptographic authentication as a starting point. So when you have this as a starting point, that's really the benefit here, that we can do these push transactions into a digital ledger. Otherwise, you're always relying on someone else to authenticate you, whether you're using a distributed ledger or a block, whatever it is. The great genius of Bitcoin was that it allowed this push transaction into the digital sphere, and we hadn't figured that out yet. We hadn't figured out how to just push information into a record, a system of record. We talk about it as a database innovation. It's more than a database. It's a system of record. It's a record with a history of itself that's constantly growing with more information being put in by multiple parties. So that's really the important part here. There are issues with our ability to test this and push it out, because you saw it even with the fork last year with Bitcoin. What you saw there was a real cultural fight between Silicon Valley that is fail fast and break things and let's move and let's go and ship it out. That's great for video games, but for cryptographic protocols, they're either bulletproof or they don't work. And you can't play around with this stuff. That's why Bitcoin's progress is a little slower than what we're used to. We saw video games come out in Moore's Law. It was every couple of years you doubled the bytes of graphics that were coming out, and we got used to that. We got lulled into a sense that you can turn innovation into a mathematical equation. With cryptography, it's a little different, because anyone can come out and propose, oh, I got the best solution, it's amazing. It's a new cryptographic protocol. Well, now we've put a marketplace around the proof of that cryptographic protocol. There are people trying to break it all the time, because there's either money one way or not. So it's a little bit of a different sort of evolution that we're seeing here. I think people will have to sort of adjust. The cryptographers won when it came to the debate around the Bitcoin fork. And I think what we're going to see here with the enterprise distribution is slow things down, learn how to reorchestrate this tool that is wonderful to express consent. It's no more complicated than that. Here's a cryptographic key. I can use it to express consent. The way we've orchestrated this system of record makes me certain that I'm able to use this to express consent.
Do you think it's needed, that tool? Are we using
It's probably, look, go back to World War II, right? And you saw you had a war, a bunch of people died. They turned cryptography after that into ammunition because they realized the power. And from that point on, it was only for state actors. It migrated into the enterprise as we deployed the internet, but we had to rely on them. We were all too stupid to run our cryptographic keys, they said. So you gave them your dog's name and your mother's maiden name. They did all this stupid stuff. They stored it all somewhere, all this useless information, to give you permission to use the internet, basically, to authenticate you. What we're saying now is you don't need any of that. Here's the full power of cryptography in your hands. Do we need that? Anything that's useful we need, right? So the market will determine how useful it is, but it's being tested, and we're seeing just how useful the expression of consent using a cryptographic key is.
We have about 19 people wanting to ask questions. Let's do a quick time check. Boss? 10 minutes. Okay, let's rock and roll. You're definitely next, and I'm going to actually kind of go across the room like this because it's getting a little hard to sequence everybody. Let's try to keep the questions short and non-combative. That was a long question. Why don't we maybe answer that question first? And we'll get to your next question. Okay, go ahead.
How do you deal with non-technology born products and or mobile products in blockchain? Because ultimately, it comes out of the ground. It doesn't come out with a digital tag. And ultimately, how do you keep provenance? How do you track provenance if you can't actually know if on the way some guy swapped something out of a container?
Do any of you panelists, I hope you guys followed that better than I did.
So just to answer your question about why blockchain would be useful just for this payment transaction, well, actually, we can take a look at it from the full transaction perspective in protecting both buyer and seller, starting with the vendor verification both sides. This is a big issue. International trade is all about trust. And the seller has to trust that, hey, I'm only taking a 30% deposit from this buyer, and he or she actually has the funds available to complete this entire transaction. And I'm not going to just be left with, and that's why deposits are taken. So one, being able to know your customer, just from the initial vendor verification perspective, to understand if this is a legitimate and viable trading partner for me. I think that's very important. Also, the merchandise authentication, understanding this was from a famous Italian brand. So being able to authenticate the merchandise, have that paperwork. There was a lot of paperwork that was sent back and forth to verify the merchandise, the years, where it was manufactured. Huge amount of paperwork involved just in that component of this transaction as well. Again, being able to have that housed and saved onto the blockchain, because this merchandise is then going to be resold by our customers. So then, having that housed and then being able to access that once again. And then on the payments piece, understanding for both the buyer and the seller, housing all of the bill of ladings and the documentation that's required, because in order for the buyer to actually make each payment, the seller was actually required to submit the bill of ladings of each shipment for each container. So again, a lot of paperwork being transferred back and forth. Again, that can be simplified, utilizing blockchain technology, because one, you can trigger the payments. One, you can authenticate and ensure that the full transaction value is available for this purchase. Two, the payments can be triggered without having to send all of this documentation back and forth. Three, the documentation can then be stored on the ledger and can be accessed again for future deals and future shipments. Another deal we're doing right now, where this is a great example, we're shipping 121,000 units of men's branded jeans from New Jersey to the UK. Our UK buyer knows that the merchandise was originally shipped here from Bangladesh. So they want that original documentation because they don't have to pay duties. So they don't have to pay duties on it. Now we have to go back, deal with the brokers and the brokers, and try to find these bill of ladings that prove merchandise originally came from Bangladesh, still sitting in bonded warehousing here, so was not cleared, so was eligible for duty-free entry into the UK. Again, a whole paper trail. This is very common in our industry and in international trade. So you can.
You're focusing on the second phase, meaning the first guy you got to trust. But once you trusted the first guy to enter into the system, every local seller of the product that came through says, well, we always rely on that first guy. We are getting that product.
Yes, for that example, exactly. And that's a huge value add.
Can I talk about a different piece of this? So your question has a lot of real world problems in it. There's at least 2 types of licenses, 3 different kinds of currencies, 3 fees that happen along the way, right? And one of the things that we don't talk about enough is, in order for money in DLT or blockchain to work, people pretty much have to leave it in the system. Otherwise, you pay to convert it out, you pay to switch it to a currency, and all these kind of things. And so one of the really interesting things that is really hard in the real world because of law and license and currency and everybody likes their own dollars is, how do I get these 2 people to use some kind of fake money value to instantly agree that the money has switched without paying the money out fee part? If we can figure that out, I mean, imagine Swift, but on blockchain, where there was just one global token, and everybody just agreed that I'm giving you 100,000 of this token. Like, it is instant settlement, money goes. But today, you can't, because, you said mortgages. Every county has a recorder. Every state has a legal way. Every jurisdiction on top of that. There's 200 things you have to think about before you can even talk. And this is why we all need to work together.
The seeds of the answer are there, though. The stable coins really had a lot of traffic, for lack of a better word, this year, especially in the recent downturn in all the coins. You saw a lot of people migrate to what is effectively a US dollar. There's a sort of monetary policy behind it. If that one's not good enough, there's much better ones coming, I believe. And you'll probably see them from multiple fiat currencies as well. Not issued by a country, but issued by someone with the ability to be transparent about what is being held to justify basically what Argentina did and failed at when they pegged their currency years ago to the US dollar, or whatever any other country does to peg its currency to the US dollar. So really the treasury management question is not a big deal. Or at least there'll be solutions that the marketplace has already provided. The other question you had about escrow, I mean, escrow is a major component of a lot of cutting edge wallets. So that's already, even just with Bitcoin, it's being developed at breakneck speed to be bulletproof, but nevertheless, this whole aspect of being able to hold in a multi-sig way a coin so that everyone is okay and that we all, flip the key at the same time to make sure we're good.
I think we have time for one question. Now, as a reminder for all of you that want to ask questions, the next panel after Silvio's talk will be much of the same topics. So if you didn't get a chance to ask your question now, you can ask during the breaks or in the next session. So we're not going to, unfortunately, get to everybody, but really loving the enthusiasm. You had your hand up pretty much this entire session. So who are you and what's your question?
How about I run a consulting company, data analytics. So in last 20 years, I've been much in the database since last year, I've been sort of helping one of the large banks in their treasury service department focus on data science on bank-to-bank payment. So my first question is related to at least 3-4 questions. Is when you guys describe this user case of trade financing, payment processing through blockchain, when will that happen in your mind? I have a second question.
Let's answer them one at a time just so we can. So I think what you're asking is when are people going to be using crypto in the supply chain?
No, not crypto. She talked about this example of trade financing payment using Hyperledger, for example, or any other DLT. And when do you think every one of you, in your mind, will happen? 2019, 2020?
I give it 3 years before one of the largest 20 companies in the world mandates it as a way to do business with them, AKA Walmart pounding the hammer on everybody and saying, hey, if you want to sell me lettuce, you better play. Didn't exactly answer, but somebody's going to drive it like that.
You look at another company like Foxconn that is extremely aggressive. You know, they've turned into a planned society. They don't want to be that. They've got all these people, and it's a disaster. You know, they know where they fit in a supply chain. They get the best terms. Everyone treats them really well, right? They're shipping to Apple. What they realized immediately was that the people way down their supply chain didn't get those good terms. They're going to factors in China. They're going to all kinds of places that were just eating their lunch. And Foxconn said, well, wait a minute here. We have so much money coming into our company. We can be our own bank. We can literally finance our entire supply chain, thousands of partners. And they're running live money now. And then they realized it's even better. We buy so much aluminum. The same people were selling all of this, are the same people who were giving all these great terms. We know that they're going to get paid because we're going to get paid. So we can give them great terms. So they realized, well, we're also buying a ton of commodities. We're buying aluminum for the iPhone bodies, and we're buying all this stuff. Well, why don't we create a marketplace in this application for the same thing? So these companies that are just coming up with new revenue streams because they're, you know, doing what they would do anyway using this technology will really help push other companies to follow suit.
Next year?
They're doing it now. So.
And I would,
They've been doing it for,
Yes.
oh yeah, they've been doing it for a year. Now, controlled environments. It's not the entire supply chain, but $10 million deals one after the other, easily.
So I think your answer is
Yeah.
now,
It's
or
happening.
last year.
It's happening. It's happening.
Yes.
It's happening currently.
I agree too. I think it's happening. There's a lot of technologies that are already being developed by companies like IBM and others for payment processing through the blockchain. You brought up trade finance, which I didn't speak about, but is also very necessary and important. I think what the issue is that companies and people are looking at, and what other members of the audience have brought up, is how do you actually build an ecosystem and have companies come and say, yes, we want to try and test and utilize this blockchain. I think for my company, which is great because we have a network of existing buyers and suppliers that are the largest brands and retailers in the world, utilizing our platform in an industry where the companies are normally not utilizing legacy EDI or XML systems. So it becomes much of an easier sell for us to say, hey, to our existing customers and say, hey, we're about to do this $2.1 million transaction. Let's, what do you guys think? Let's do this utilizing this technology. And so for us, you know, as a company, what we're looking to do, and we're examining who are the companies that are developing these technologies? What are the ones that we should bring in to basically offer this to as a supply chain offering to our current customer base? And what makes sense so that we can continue building and scaling? Because what we don't want to end up is where EDI ended up, where, you know, it was just it ends up all of these different solutions that are very fragmented and utilized or not utilized by different companies around the world. Highly inefficient. And that was, you know, and the potential for blockchain is leapfrog beyond that. But that becomes looking at, okay, there's a blockchain technology company coming up with a blockchain solution for cutting bills of lading. There's a blockchain company coming up with a solution for merchandise authentication. But how can we bring those together in a way that companies engaging in the supply chain can actually access and utilize them throughout the entire supply chain?
So, well, So, what I would add to that, I mean, first of all, I agree with all my colleagues said. It's about, if you ask a client, when we go spend time with them, yes, we want to we want to digitize our supply chain for ocean cargo. Okay, you get that done. That's real work. That's real work. So everyone asks the question, well, geez, what about payments? What about marine insurance? What they want to know is, what's your strategy? Do you have IBM, do you have a supply chain strategy so as you develop these solutions, do the data sets connect? Right? Is your environment going to be open so that if I decide I'm going to engage with an ISV, that someone who created a customs broker, does all that customs brokers do today, it's automated. Will that be able to latch into the solution that I have? That's the real play here. And so I believe we've got a very good strategy around that, and it drives every decision that we're making. If it can't connect, the data sets can't connect down the road, we're doing our clients a disservice. And that's what's going to determine.
Are you going to be a customer? Okay. We have to, I'm getting the signal that we are out of time. I want to, let's have some applause for the panelists. This is probably one of the most intense panels I've ever moderated.